Hello everyone, thank you so much for watching. My name is Juan. I'm the OC agent here at Nationwide Real Estate Executives, and in today's video we're going to cover the 5 things that you should never do when applying for a home mortgage. So buying a home is probably the biggest purchase that you will ever make in your lifetime. So it is likely that you will need to secure a mortgage loan in order to buy that home of your dreams. It is really important to know that your loan approval is not finalized until the day your escrow closes. The escrow period on your home is typically between 30 to 45 days, and during this time, the lender will be digging deep into your finances in order to make sure that you still qualify for that loan. So it is really important that nothing major changes in your finances during this time, or your loan approval may be in jeopardy. So let's start at number 1. Number 1 is do not make any large purchases, such as a new car or furniture for your new home. When applying for a mortgage, the first thing that you need to remember is to steer clear of buying any car, any expensive appliances or furniture or jewelry or other luxurious items on credit during this time. No matter how exciting it is to buy the items and decorations for your future home, remember that all of these purchases will add up. Any new debt will include new monthly obligations, which can result in higher debt to income ratios, and that makes for a riskier loan for the lender. So even if you were previously qualified, if the new debt throws off your debt to income ratios, it is likely that you will no longer qualify. So don't buy anything on credit during your loan approval process. After you're approved, you can do and buy whatever you want. It won't matter. Number 2 is do not change jobs or the way that you are paid at your job during this time. One of the most significant factors lenders look into when borrowers apply for a mortgage is their work history. Lenders will verify the jobs that you've had, but they will look closer at the last 2 years of employment. They want to make sure that you have a good source of income and that you can repay your loan. A lender will have to track any changes to your annual income. So, if possible, refrain from changing jobs or changing how you are paid at your job, especially if you are on salary-based income by the time of your application. You'll want to avoid becoming self-employed during this time as well. If you must move to a different job as part of your long-term career plans, make sure that it is within the same industry and that you can justify your move. Otherwise, that may be a red flag for the lender and you may not be approved. Number 3, do not apply for credit or close any existing accounts. Refrain from applying to new credit, even if it's for a new credit card. When you have your credit run by several different financial channels, including mortgage, auto, or credit cards, your credit score will be affected. A lower credit score can impact the interest rate for which you were originally approved, and it could even affect your eligibility for the approval. Also, do not close any accounts during the home loan process. Remember that a significant part of your credit score comes from your credit history, where lenders can assess if you have been making your payments on time over a long period. If that account does no longer exist, the lender may not have access to those payment history. Number 4, do not make any huge deposits of money into your bank account. If you think having a huge amount of money in your bank accounts will help you better qualify for a home loan, that's not exactly how it works. It can actually hurt your chances of being approved for the mortgage. Cash is really hard to trace, and your lender will need to source where your money came from. If you made an unexpected deposit, lenders might think that you took out a loan or cash advance just to add money to your account. You must discuss with your loan officer the proper way to document your transactions. If you're expecting a large sum of money or keeping a significant amount of cash on hand for emergencies, be prepared to show a strong proof of where that money came from. Also, save yourself from trouble by always keeping copies of deposits so that you have proof when you need it. Okay, so number 5 is do not, I repeat, do not cosign for any loans for anyone during this time. Cosigning means that you're agreeing to pay off someone else's debt when that person fails to make payments for any reason. And while it is a generous act, especially if you can help a family member or a friend get a loan, remember that you are still obligated. And if you're in the process of getting a mortgage, co-signing a loan is a big no. Even if you swear, if you pinky promise that you'll not be the one making the payments, that they're gonna make their payments, is not a problem. It's a big no. Co-signing is automatically a red flag for the lender. So do not co-sign any loans. I know it can get awkward, just don't do it, because it will put your loan in jeopardy and your house of your dreams as well. Well, that has been the top 5 things you must never do while applying for a mortgage. If you have any questions about your specific situation, don't hesitate to reach out. You know, my email and my phone number are down in the description below. If you have found this video helpful, please like, share, and subscribe to the channel. Thank you so much for watching again, and I will see you on the next video.